Tesla broke in such a way that the count was very simple. Hey everybody, in today's video we're going to go through 5 stocks to watch tomorrow, 2 indicators that you're not really paying attention to on what is going on in the market and why they're very important. We have a lot to get into, so let's jump into it. Stay to the end because we're also going to do the indexes. Now, what happened today? So this is the first indicator that no one's really paying attention to. This is the 10-year yield gilt. This is like a 10-year treasury in the US. So you can kind of see this little H pattern right here, right? Make sure you subscribe to the channel, click all notifications because what we go over is extremely timely. This is where you're at over the past 10 years. Does that look normal? The answer obviously is no. Let's take a look at this on a monthly. If you look at this at a monthly for all the data only goes back to 2004, you're at all-time lows. But if you really just put this in context and you take a look at from where you started to where you're at now, this is where you're at. Now you're looking at this and you're saying, okay, bonds are down 30% roughly since the beginning of the year. But when you start calculating in how much you're down in the shorter period of time, it's actually much stronger. You're basically 2 months out, and the majority of that 28% has just happened. Well, that 23% move down from here is absolutely huge for portfolios, specifically pension funds. And so what's happening is they're being forced to sell bonds because the yield is going up. It's a self-fulfilling prophecy. Second thing you should focus on is the British pound in relation to the US dollar. You can see how we kind of troughed here, but we're rallying up and we're coming right back. Now, to put this in perspective, right, you're at 10-year lows, but it's worse. You're actually at 20-year lows and you show zero sign of this bouncing. Now, people are going to say, that's great. What does that have to do with Tesla? I'm just going to put it in perspective. It's pretty much everything. And this is why. Because as that gilt sells down, as the pound deflates, the dollar goes higher. As the dollar goes higher, it weighs on our U.S. equity markets, which contracts PE. You might want to listen to that a couple times just so you get what's going on. It has nothing to do with, are they going to sell 500,000 cars? Are you going to sell $100,000 cars? Is China on lockdown? All you're seeing is multiple compression. We were staving it off for a period of time. We're no longer doing that. So how can we benefit from that? Well, if you've been following us for some time, and even if you get the newsletter, there is a link in description to get the newsletter. Make sure that you're getting it. It's free, and I've been having them come out daily because there's so much information to go through with what's happening, right? We have PPI tomorrow, CPI. You don't want to miss these. So here you are, 15%, right? So remember I explained how to measure the move so you know where you're going? Okay. So you come here and you just go 15%. Well, that's 17%. I don't like measuring that. I'd rather use the 15. You don't want to look at the same number, right? And you can see how you kind of settled in there before you made it a little bit lower. And now it looks like we're going to do that 209. Candidly, if you've been following us for weeks, you know we've been shorting since we reversed the position up here at 314. You can go back and watch all the daily videos and look at the timestamps. Now, what do you do with this? I see no way that this is going to hold. So the only chance that you have of seeing a short-term bounce is if PPI comes in good tomorrow and CPI comes in good on Thursday. Those numbers can change the trajectory of the market just like they did. And we'll see that when we start doing the indexes. So the question is, what do you do now? Well, you have to go out there and you have to look for how to benefit from multiple compression. Multiple compression essentially means things are going to come in. One of the trades that we pointed out recently in one of the videos, and we did this in the trading room today, you have to get up and in these trades. I'm going to give you some quick tips here. So you take a look at something like a snow, and you see this on a 15-minute chart. The majority of moves of a daily range right now are happening in the first 30 minutes, okay? If you take these first 30 minutes right now, the majority of moves and range is set for the day. No matter where you do this, the majority of the days, if you go through this over the past couple of weeks, this is what you've been dealing with. So you actually have to move a little bit faster. Now, this was one we did in the trading room and we shorted it. And all we did, this was very simple. Gap down, looked at the long-legged doji. We know long-legged dojis are signs of uncertainty, right? So we know this, okay? And then as we started breaking down, we just kept going lower. And then you snap down, you form a doji, trim, rallies up, comes back down, trim, rallies up, right? And all this time, all you're doing is moving your major stop up. That's all you're doing the whole time, okay? And then by the, what was it, 10:30, we're at 146 and we're closing the rest down here and leaving like a 20% runner on to get stopped out, probably here or here, depending upon your risk parameters. But this worked. Now, why am I pointing this out? Because you need to be scaling out of your trades and staggering your stop. I don't think they're understanding the environment they're in. Everyone keeps waiting for this, quote, bounce or the Fed to bail us out. The Fed is not coming. So that's not even on the radar. They don't even have the ability to help in the same way. And that would be too long of an econ lesson to even go through. But here's a quick tip. See this line? When you start breaking these trend lines, pay attention. You can go through all of these. Next to fall is going to be SaaS names. It's going to be software. Comment and tell me that this doesn't fit into those categories. So what I'm looking for that you're breaking when you break these 50s and you break these trend lines and you're in software, you're going to have a problem. I don't care if you're using MACD or not. Right now, I'm using it a little bit just for little discrepancies. But these kinds of names, yes, of course they're going to trade back. Do not rule this out. See if it bounces back up to that level and go from there. This was another one that we did today. And this is exactly what I'm talking about. You have to get up and in and scale out, and then you hold a runner and you see how that runner works. Here's a great example of that kind of trade, right? Where someone's riding a line, all of a sudden you flip the line, you trade up, and then you get this doji up here, which gives you some uncertainty, but it's also a shooting star. You recognize that, and pretty much you get out of the entire trade if you want. We scaled out, got out right around here, and that was pretty much the end of it. You're always getting the opportunity to get back in. You're always getting the opportunity to get back in these trades. You do not need to feel like you're missing the boat. It's really important to understand that. SOXS. So this is one I've been beating like a dead horse for the past probably 3 or 4 days. Here's your island reversal. I believe we started talking back here at 55. You can go take a look at Saturday's video and the newsletters. Now look at us. Look at how we're breaking out. I figured it would take us about 2 weeks to get here. If you have a bad PPI number tomorrow, you're going to take that out. People are starting to get the fact that we're going to go through multiple compression based upon how this whole global economy is tied together. And there's not a darn thing that they're going to be able to do to stop it, right? Unless CPI comes out and unless inflation gets crushed fast, which it usually takes a very long time to crush inflation. So keep this in mind. This is definitely still should be on your radar, hands down. When in doubt and you don't like shorting, just stick with the bear ETFs. And if you don't like doing that, just sit out of the market. You don't have to trade every single day. Because I walked through this yesterday and I gave this as a quick tip. If you're trading intraday and you don't have VWAP on your chart, you're at a huge disadvantage right now because we're trading super technically. Everything is more linked and it's all one big trade right now. So when VWAP comes up and you break VWAP and then you try to get above it and you can't, support has become what? This was support, it's become resistance. Resistance, flips. Once you flip, that was it. This was the simplest trade in the world. Go up, higher high, there's your stop right there. I mean, that whole trade is costing you 50 cents to be in this, and it wound up going up about $2. So it depends on your trading style, but to say that there's no opportunity to make money out there right now is just, it's not accurate. It might not be your kind of way to make money, but there's a lot of money being made out there right now trading these kinds of names. I would continue to focus on the ones that I just went through, and I do want to spend a little time on the indexes. PPI, when this comes out, we're not really sure how we're going to react to it, right? We really don't know. We don't know if it's going to be good or bad. It should be good because it was good last time, but we're just not really sure. But what we have to look at are just the facts. And this is as cold as it gets for us. I mean, this is support. Support has flipped to what? Resistance with a long-legged doji. Now, good PPI, CPI, could that rally us up? Yes. Can that get us a higher high? I don't know. It would really be dependent upon what that level is. But I'm just going to give you a real quick level tomorrow in case you want to do some of the bear ETFs. You break 355.72, it's on. So if you break that level, then what's going to wind up happening is, remember that count I just did on Tesla? Right? When you start understanding patterns, you can see them everywhere, right? So there's a 6% drop. So if you take out that doji tomorrow and you break that neckline pattern, you're saying you could drop 6%. Now, obviously the points are a little different. So we're going to say 5.5, but that puts you at 340. Doesn't mean you're going to get there in a day, but that means that is your level. Pardon me. So focus on this, and please comment on these videos. It helps me create content. Let me know, is it helpful looking at the pound or the guild, or do you just not care and you just want to see the ideas? The whole purpose of me doing this is to educate so that you can learn to do this on your own. You see this line right here, and as you come across, right? What's happening here? Support has become what? Resistance. Okay, it's glaring. 1, 2, 3. I just did a whole newsletter on this. Link is actually going to be in the community tab. That's another thing. Make sure you subscribe, because the community tab is going to be more active with charts and newsletters that are obviously all free. So there you are, 261. You break that tomorrow, just get out of the way. Just get out of the way. I can't be any clearer. We need to just take a look at a couple other things here. Remember these levels. Every reversal that's happened in the market from where we bottomed and then bounced, every single one, you can go and mark them yourself, has happened when we've been between 32.5 to 35. Every major sell-off is above 35. If you can't get it together and come under this, and you break through this 35, you could see this really pick up massively. It would be perfect to pick up going into PPI if PPI is bad, right? Because everyone expects PPI to be good, considering that it was the first to turn negative and they weren't even predicting it going negative. But here we are again. Why is this going up? This is going up because of the dollar. Okay, why is the dollar going up? Because of what's going on with the guild, right? Right now, Fed policy is crushing the yen, the euro, and Great Britain's got massive issues. Now, the other problem Great Britain's having, and I talked about this a little bit, they have ARMs, meaning mortgages. ARMs are substantial in the UK versus the US. Something like 40% of all mortgages are going to come due in the next year, all at substantially higher rates. So it's a major, major problem that's going to be felt all over. But if you're taking a look at something like this, you've already flipped, you're already closing at almost a new high. If this gets over this 4, and you see a 4 handle on this, which is very realistic because of what we're seeing going on in the 2-year. The 2-year treasury right now is 432. It's very realistic for this to have a 4 handle on some bad numbers. If that happens, you're going to see equities come in really hard. Walked you through exactly what you need to look for. Watch those 2 new indicators. Watch those levels that we called out. And you might want to watch the beginning part of that again, where I talk about that 2-minute mark, I think it was, where I explain how it's all correlated. So then you can go and look for the correlations and see if you can find it yourself. If you are interested in the trading community, there is a preview right here. Have a good night, everybody, and trade to win tomorrow.